Alrighty, good morning traders and welcome to the Forex Morning Coffee Kickoff here on the Monday morning, where we go ahead and take a look and see where trades are setting up and how we're going to be able to trade this week. Now, there's no doubt that the last couple of weeks have been pretty rough for us, and we are in a recovery trading mode. So we're going to continue to do that as we spoke about on Friday. We start looking at recovering on our positions and then just pressing the reset button, because we know that we can't get this recovery. We can't recover overnight. It's going to take some time, right? And so we're going to go through this the recovery process through the next few weeks, maybe even a month. And if it has to take us a month and a half, then so be it. But we're already starting to see the market slowing down a little bit, especially specifically in the Tokyo market. Tokyo market hasn't been as so aggressive as it has been over the last couple of weeks. So this does give us a sense of hope that the coronavirus is starting to wear out in the East, which means that it's going to probably take us about 30 to 40 days before we start seeing effects here in the US. So let's go ahead and take a look and see what's going on. Firstly, of course, we do have the fundamentals. We also have to pay attention to the fundamental news. So let's go ahead and take a look at the news calendar and see what we have that is heading out for this week. All right, this week doesn't look like a big fundamental week this week, other than, of course, we do have a lot of pound data and euro data. As you can see right here, we have, at the moment right now, we've got the Fed announcement. What is this Fed announcement here? It's on Monday at 8 a.m., which means that it should have been taking place already. What is this? Let's see here. Oh, okay. Well, that's pretty steep. All right, we've got the Fed announcing extensive new measures to support the economy. Actually, this must have just popped up on the calendar. I did not see that yesterday. So this is just something that just popped up right here. We'll go ahead and take a look at the dollar index and see how price is moving based on this news. We also got European news coming out. We've got pound data coming out, all flash manufacturing PMI. We have some pound CPI yearly data, which is important right here. And this is really going to reflect how the UK has done last year. And so far, it does show that CPI is ticking down 1.6%. That is the projected number. And then on Thursday, we've got the monetary policy summary, as well as the official bank rate. And they expect to keep the rates unchanged at 0.1%. Are they going to go into negative territory? I don't know. Let's see what happens on Thursday. All right. And then we do have the weekend that we're going to head into the weekend. Looks like no data on Friday coming into the weekend. All right, so with that being said, let's take a look and see what's going on here with the calendar. And I'm going to go into dollar index. Let's take a look at dollar index here first. And here we have the long-term trend. That looks like something like this. We have an inside trend. Look, there's no doubt that we're expecting some recovery in the dollar. Well, let's not say recovery, but looking for a dip in the dollar. We did have a dip on Friday. Friday's dip came back to retest this upward channel line right here. That rented and test that. So we're going to see a little bit of a downside move in the dollar. And if we do start seeing that happening, that means that clearly there's some sort of action taking place with regards to the coronavirus here in the US, and that investors are starting to feel a little more confident going into more high risk assets rather than sticking in cash right now. Everyone's moved to cash to protect their investments. Let's take a look at the market right here. Let's take a look at the Tokyo market. Tokyo market, we did see bounce off the support right here, and we're expecting price to move up. This is actually not the Tokyo, but this is the yeah, it is Tokyo market right here. So we're looking for price to move back up again. Let me see here. Oh, my bad. Sorry, this is the Japanese stock index right here. So we're gonna see a bit of a bounce off here. This is the oil's gone ahead and dipped again. You see right here, we did test those support levels. This is the weekly time frame. So we're still off that support. We haven't broken through that support in US oil. And so we're expecting, obviously, price to move back up again. That's our projected move is down. It's back up here to about $58 a barrel. We will definitely find that $42 a barrel is a bit of support there that'll become this current resistance. So we're definitely seeing some market action that's going to take place over the next couple of weeks, and I definitely see a recovery well on its way towards us in this next few weeks. Now, let's take a look at the futures market. If you take a look at the futures market, it looks pretty good right now, considering the last couple of weeks. All we saw here was just red, 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 red. All right, you see Dow Jones futures is we are Dow futures are up. We get S&P 500 is futures are up. We got Nasdaq 100 up. Russell 2000 is up. Nikkei 2220. That's the Tokyo market futures. That's up. We got oil up. And that's what's really important right here is the VIX. See the VIX right here? The VIX is right here is down, which shows that if we start to see VIX down, we are starting to see less panic in the market. That's what we want to see, right? The further down we see VIX, we're definitely going to see the stock market starting to rise, and people feel a little bit more confident in starting to invest again. Let's go ahead and take a look at action this week. All right, I'm going to go and open up a new document. And this one's going to be for today's date. And today's date is #23rd. All right, and I'm going to go ahead and clean this up right here. And let's go take a look and see what's going up this week. Let's start off with the euro. I'm going to go to the euro, Aussie dollar right here. Okay, so euro Aussie dollar shows no opportunity this week. Let's go ahead and use that as hit target. Now, traders, I'm not going to stop trading this strategy. I'm still going to continue to trade the trades that I'm not in, but obviously watch very carefully the ones that I am in. So euro Canadian, let's take a look at this one. We have a hit target. Let's go to euro JPY. Hit target on euro JPY. Let's go to euro New Zealand dollar. We have a hit target. And then euro pound. We also have a hit target right here. So all the euro crosses are hit targets. That means when I see this, price is moving sideways. All right? Price is moving sideways. Oh, hang on. Did I take a look at euro US dollar? Oh, euro US dollar has got an unhit target. But this one's setting up as a low probability right here. All right, looking for price to move back up north. Most likely we're going to hit that target for the week. Let's go ahead and take a look at the pound crosses. Let's go to, the pound Canadian is first. So pound CAD, we've got a hit target. Pound JPY, we have a hit target. Pound New Zealand dollar, we have a hit target. Pound Aussie, we have a hit target. Pound US dollar, we do not, we have an unhit target. So looks like same thing right here, only the US pairs are the ones that are offering an opportunity this week. But I'm going to call this one also a low probability right here. Alright, reason why I'm calling a low probability, it's very good chance that price will probably move up to this level before we get into an overbought condition. Expecting some weaker US dollar, that should push the pound back up north. Alright, and we will go into some deeper analysis in a moment. Let's just go ahead and take a look at the opportunity this week. So Aussie JPY hit target. Aussie New Zealand dollar is a unhit low probability right here. And we're looking for a sell, so looking for an overbought condition. Bearish alert. And let's look at the other Aussies here. Aussie CAD. Hit target. Aussie US dollar. Also low probability. Just like the other US crosses. So we've got three opportunities this week. Dollar crosses, low probabilities. Let's take a look at the New Zealand pairs right here. This is New Zealand CAD. This is also a low probability, looking for a bullish hit. And then US dollar CAD, also low probability, looking for a bearish hit right here. So both of them right here are unhit targets. And I'm going to call them low probabilities. So we got 1, 2, 3, 4, 5 opportunities this week, but I don't think we're going to get much out of those pairs. Let's go ahead and focus in on ones that we are currently in. Alright, so these are the ones that I'm currently in right here. And as you can see right here, I am in on the Euro Aussie. I got quite a bit still to go. We got 3 positions in this one right here. Let's go to Euro Aussie, take a look and see what's going on with Euro Aussie. Alright, this is Euro Aussie. Come on. Alright, so going to the larger time frame right here, we're looking for price to move south. We did have a nice little move. You can see right here on Thursday and Friday, both coming back down support here. We've just seen a little bit of upside move today. But overall, we are expecting a bit of a correction move on the Euro Aussie. See right here, hitting resistance, looking for price to come back down south. I'm going to go to the 1 hour time frame right here. This is the 1 hour. Sorry, that's actually the 15. My bad. There's a 1 hour right here. Now the 1 hour says that we're still bullish at the moment right now, so we're not seeing any signs of changes yet. But also we do see a bit of consolidation here too. Here's support, and here is the resistance right here. So this pair has moved into a bit of a sideways range, but we're expecting price to eventually go ahead and continue its trend, doing this sort of an adjustment right here. And that'll be our adjusted trend line. Something like this. So we'll be looking for price to drop down to around about 60, 69, 65 down here. But we're definitely not on our way yet. Now, I've even said to traders in my trading room that we're going to go ahead and start thinking about selling on the 15-minute time frame just to get into some quick trading opportunities. The problem here, traders, you've got to watch out for the spread. I don't know if you've noticed, but the spread is definitely widened quite a bit. In fact, in the Tokyo session, you'll probably find the spread anywhere between 15 and 20 pips wide in the Tokyo session. So just be a little aware of this as you go into the into trading during the Tokyo session. Even in the US and the UK trading session, if you're looking for some short-term trading, maybe you want to go ahead and stick with some pairs that haven't got such wide spread, because now chasing after 15, 20 pips is not really an option anymore, because if you've got a 15 to 20 pip spread, you're really getting to break even. You're not even making money. So you got to look at the spread. Be very aware of what the spread is at the time that you trade, because if you're going to do some short-term trading, it may need that you got to chase some 40, 50 pips before you actually show some good profits. All right. Specifically, if you got a stop loss that is 20 pips wide, you got your spread that's 15 to 20 pips. That's already 35 to 40 pips that you got to make up before you're in profit. So check that out. All right. So these are the trades we're in, and if I look at the spreads right here now, on this platform, this is FXCM right here, and FXCM, FXCM is showing, even this is wide, but look at the pound New Zealand dollar. That's at 15 pips right here. I mean, this is during a peak trading period. We've got a 15 pip spread there. We've got a 10 pip spread on the pound Aussie, anything between 7 and 10. And the others are anywhere between 2 and 5 pip spread. Euro New Zealand dollar is also bouncing back and forth. Look how the spread jumps up and down. The spread is jumping between, and let's see, last week I was closing out some positions, and it took me almost 10 minutes to close out my positions because they kept on quoting me off price. And that's because they not only is the price moving back and forth, but the spreads are jumping up and down. So, this is a problem. All right, but keep an eye on this right here. So going back to the Euro Aussie right here, Euro Aussie, we're expecting on a 15-minute time frame for price to move down. And there was a signal, or nope, there was not. All right, so we're waiting for both price and for the signal line, which is the blue channel right here, to be below the red channel. Once that happens, it's a go. Now, since we've had this retracement move right here, we had an opportunity to sell right here for some short-term profits. Let's take a look here. There was about short-term profits. Okay, it's actually a joke, right? Short-term profits, we're talking about 523 pip opportunity here. And if price moves back below again with the signal line, then maybe, just maybe, we'll pick up another short-term profit opportunity of 460 pips. You got to laugh at that, right? Yeah, we're trading a 15-minute time frame. We're trading a range on a 15-minute time frame, and we're chasing after anything between the 520 pips to 460 pips. You got to laugh at that, all right? That's pretty funny. I don't know. Is it just me laughing right here? But I think that's pretty funny. Hey, it's a great opportunity, but that's why going to a 15-minute time frame is not a bad option right now if you're looking for some short-term trading. Let's go ahead and take a look and see what else we've got going here. That's on the Euro Aussie. So Euro Aussie still looking firm for a downside move. US dollar Canadian. Only time we're going to start seeing this move is, of course, with US oil. US oil is back at a support level. We want to see US oil start trading above 25, heading to 30, and then on its way to 42. So if we go to US dollar CAD right here, then if we take a look here on the 15-minute time frame, this is going to probably be the adjusted trend line right here. So I'll be paying attention to this as price goes back down south. I'll be looking for it to confirm. It's not confirmed yet. All right, just so that you know, we do see price below the red channel. Red channel, I call the red channel my right trader max. But the blue channel, which is the channel line, that's not there yet. All right, we need to see price moving below that. So we've got to see price below the red channel and, of course, the signal line before we can go ahead and enter. But I'll be taking a close look at this and look for the opportunity to go ahead and start selling the sell. Okay? And going to make up the losses that we made up on the pound last couple of weeks. So we're looking to sell the pound. Sell the US dollar CAD. It is Monday. I have an excuse, right? I have an excuse. Let's go take a look at Aussie US dollar. Now, Aussie US dollar, we were buying Aussie US dollar. We're looking for dollar weakness once again, just like we look for weakness in the US dollar Canadian. Here is the 15-minute time frame. And hey, I'm going to stick to the 15-minute time frame just because I believe we're going to have great opportunities on this. Here is going to be the adjusted trend line. All right. Now, price is not price is above, or at least at some point was above. We don't see the signal line quite there yet, but at least we've got a large opportunity up here. We've got about 300 pips going long. So Aussie US dollar expecting another 300 pip rally. And it's just going to be a matter of timing right about here to look for that move to go long. Want to make sure you keep your stop losses down below the lowest point right here. Keep them out the way. Look for price to continue to move back up north again. So I'm feeling confident about pound. Why am I keep saying pound? Can someone please tell me why I'm saying pound every time? All right. All right. So Aussie US dollar. We're expecting Aussie US dollar to go ahead and rally. Okay. That's the expectation right here. Let's go ahead and take a look and see what else we've got going. And let's jump into this one right here. This is Aussie US dollar. Let's take a look and see if we can get what else we got going here. All right, let's see here. What about euro pound? We've got 7 positions in that we're selling on euro pound. Oh, I get to say pounds. Nice. All right, so here's euro pound right here. Let's go ahead and find out what's going on here. So we had a downward channel right here. Actually, we had a more of an aggressive channel coming down over here like that. Price now gone above. So I won't be looking to sell this one until I see price working its way. Oops, sorry. Waiting for price to work its way back down south. So I need price to go ahead and get back below the main channel, the right trader max channel right here. And once price is below that, and we have the signal line also confirming the same direction, we have a strong bearish bias, right? Not ready yet. Not ready yet. Maybe this is going to be later on today, maybe tomorrow. I don't know. The opportunity here, once we break below, the opportunity right now is about 387 pips. But I think once we get the signal, we may only have a 300 pip opportunity. So we're looking for price to move down about 80 pips before we can look to get in on this one. But I'm still going to be locked and loaded, looking for price to move further down south, looking to take opportunity. What is the, let me see here. How much are we down? How many pips are we down on this pair right here? Let's go to euro. We're down 247. All right, 247. Now listen here. I am going to be adding on to this position. So which means that if we're looking at this, and we may have a 300 pip opportunity, that means I'm going to be in profit about, give or take, what, 300, 250, so about 50 pips. I'll be in profit about 30 pips, 50 pips once it gets down to the support level right here. So it's not a whole bunch of profit. So what I got to do is I'm going to go ahead and add on to my position, and I'm going to add on to my position once price goes ahead and takes out my, it's probably going to be this. We're probably going to have to see this take place right here. Hang on, let me just see if I can get my... We're going to have to see price do this. Take out that support there. So basically break here, come back, retest, and then head back down south. So when we do that, we're going to have a nice little bearish crown setting up right here. Price can come back to retest probably our channel lines right here. Then that'll be a good sell to go ahead and add to the position heading back down south. To go ahead and bring up that 250 average loss to around about, actually, you know what, if we drop 80 pips right here, then that 250 pip loss will drop down to about, call it 170, right? 170. And if we're chasing after 300 pips from there, actually we're going to be in the money about 130 pips. So that's a little bit better. And if we do manage to add on new positions right here, we're going to be able to increase this to about 200. And that's on 7 positions, giving us about a 1400 pip opportunity to gain back our losses from the last couple of weeks. So it's going to be a good trade. We're just going to have to be patient on this one and wait for it to happen. All right, so we're going to be patient. Now, I can be aggressive. I can say, well, I'm going to be a little aggressive and start trading it short right here. But remember, this trend line that I drew in right here is not completely legit. All right, I do have a lot of highs up here that I've used to test it on here. Right, so you can see there, I have a lot of highs up here at the top. So this is somewhat legal, if I can say that. But ultimately, we need to take out the low right here before this really becomes a solid trend line channel. And so which means that it's got to go ahead and trade this far down before we can go ahead and say that's our confirmation. So this low right here would be our confirmation for this downward channel. All right. All right. What else we got going here? We got Euro, US dollar. Now we're out of those positions. Did I close out US CAD? Nope, I got this one still in. We spoke about that. All right, let's take a look and see what else we got going here. And by the way, if you've seen that your losses are a little bit higher than what they were, let's say, actually on Friday was it Thursday? No, it was Friday. Friday, late afternoon and Friday, I was actually in the money, quite a bit in the money. But since they changed the spreads, since they widened the spreads on all the pairs, then suddenly now I moved out of the money now because of the spread. So a lot of the losses that we may be seeing at the moment right now is also due to the spread. Not a lot of the losses, but the losses that we're seeing right now, some of the losses, also due to the fact that we're seeing wider spreads as well. Because like I said, I was in the money on Friday until it changed the spreads. And the margins have been changed over the weekend too. I don't know if you noticed that too, but they definitely changed the margins as well. You should be running out of, well, not running out of margin, but you should have less margin today than you had last week because they started changing the margin. And on some pairs, like I know we don't trade the Mexican peso, but I think the Mexican peso went up like something like 10% in margin. That's pretty nuts. All right, so let's take a look at Aussie US dollar. I'm in the money on Aussie US dollar. Let's see from a trading perspective, long-term trading perspective, what that looks like. Oh, I think we've covered Aussie. Sorry, my bad. I think we've covered Aussie. We're looking for Aussie to bounce back up. Not quite there yet. Euro pound we've covered. Let's go to pound JPY. We've got 8 positions on pound JPY. I want to cover that, and I want to cover Aussie JPY. So pound Pound JPY and Aussie JPY. Let's go to those two. So pound, and what are we looking at right here? Pound JPY. We are bullish on pound JPY. We are about down 49 pips. This is pretty cool. We got 8 positions on this one right here. We're down 46 pips right here, but that looks like it could go up very quickly. Let's take a look at the trend lines. Now this would be my legal trend line right here. This would be my projected new trend line. And this would be the channel going up right here. So once price breaks above, now you can see that the blue channel is still below the red channel right here. So I'm waiting for price to trade back above, take out the highs, show higher highs, higher lows. All right, higher highs, higher lows. And once we get that taking place, we're going to start looking to buy in on this one right here. So this one's looking good. We can see that there's some inside channels right here. All right, there's an inside channel right here. That price has gone ahead and tested right here. And as soon as we break through this right here, we may get a retest and a continuation of the rally. So this looks good. I like this. Now we just need to break through. You can check over here, struggling to break through. Hang on, maybe I should be a little bit more fair on this. There it is there. That's more how the trend line should be placed right here. Alright, so if we do break through here, then we could see a nice little upside move continue. Alright. Alright, that's the this is the pound JPY. Are you talking about, Jason, are you talking about the pound JPY? I see some previous resistance over here, but I'll have to look on a large time frame. Looking at the 15-minute time frame will give me temporary resistance and support. I'll have to look at a larger time frame to be able to identify that. So here's the larger right here. And there is my, there's that resistance that Jason maybe you speaking about there at 130. And I'm about 100 and, actually 130.55, so I'm about 200 pips away from that level there. Yeah. Oh, euro pound, I got you. Sorry, I just saw the chat now, my bad. All right. So I'm excited about, obviously I'll be watching for 130, making sure that 130.55 that we mentioned break through that. If we break through 130.55, I think we're in for a nice little rally to the upside to 140 and change, maybe a little lower than that. So there's definitely some room to the upside, right? Once we break through that 155 level. Let's go ahead and take a look at what else we've got going here. And let's see here, pound. If they can tighten up the spreads, that'll be also very nice. Let's do this. So Aussie JPY, we said we're going to take a look at Aussie JPY as well. Aussie JPY. Aussie JPY, very similar. Listen here, traders, I'm going to be honest with you. I'm going to be real honest with you. I'm expecting some nice recovery this week. Really, I am. The way if it's not going to happen this week, look here. If it's not going to happen this week, it'll happen next week. But very, very soon, we are going to see a recovery move. All right. Yeah, we can see that price, and I can go ahead and put in also these larger swings, like from down here all the way up here. And you can see price is chasing after that level up here at the top. That's approximately around 488 pips right here. So, I mean, we're definitely due for a nice little rally to the upside. There's no doubt about that. It's just a matter of time before this takes place. But we're definitely expecting an upside rally. And as soon as price starts getting above the signal line right here, it's going to be time to start getting into this trade. Now, I know this is a 15-minute time frame, and if you go to the 1 hour time frame, the 1 hour time frame may say we're not quite ready yet, but I think getting on the 15-minute time frame early can get us the opportunities quicker. It does create a little more risk of price moving against us, but I think overall, if I look at the larger time frame, overall, we are setting up for a possible correction move on a lot of the moves that we had over the last 2 weeks. So, the Tokyo market, like I said, Tokyo market's starting to settle down a little bit. And with the Tokyo market settling down, we are seeing a little bit of, in fact, let me take a look here. I've got a phone at my desk here. This is one of my other phones on the charger. Ah, darn it. Okay, doesn't really matter. But I was looking at the market setups on my phone, and specifically the Asian stock market. Looking at the Asian stock market, there is definitely recovery seen, because you're not seeing as much of a downside move as we did the last couple of weeks, just like I said earlier on, right? And so with it starting to settle down, all right, the most important thing right now is to start seeing any sort of recovery in the coronavirus. If there's good recovery, and we've seen businesses starting to open up, Apple opened up their stores in Tokyo. So with that being taking place, there is some sort of like, happy media with regards to people feeling a little bit more comfortable. And like I said, the VIX, if you look at the VIX and the VIX is dropping down south, looks like less panic is taking place at the moment right now. So all these signs, there's a whole bunch of different signs indicating that things are starting to turn around for us. So again, just going to have to watch these. So these are the pairs I'm going to be watching. I'm going to continue to watch the pairs that I'm in currently right now. And I'm going to focus in on those pairs and make sure that I'm going to stay I'm not going to be aggressively adding to my positions, but I'm definitely going to add to the positions as price starts working its way towards my target. So I'm going to be adding to the positions, but I'm also going to be focusing in on a more of a subtle approach, okay, because I've got trades in already. So I'm just adding a little bit more to bring my break-even price down a little bit lower, so that when we do make it up to our targets, that we take in more profit home to make up for a little bit of our loss that we made, or not a little bit, our losses that we made over the last couple of weeks. Now, I said this on Friday, that we don't really want to go ahead and chase after our losses, right? That's not the game. The game plan right here is to make up some of our losses. If we manage to recover all our losses, fantastic. But we already said that we're going to give it some time, right? If it means the next couple of months that we have to give about that much time, then so be it. But what we're not going to do is we're not going to chase after our losses. We're not going to try and make up our losses in the first week, all right? That's not the game plan, so don't get that aggressive, because you may put yourself in a worse position. You don't want to do that. So let's start recovering slowly, all right, and taking some profits back. And some of the pairs, by the way, some of the pairs that have got hit targets this week that are not going to be a possibility for us to be able to trade this week based on the strategy we trade, you may use those currency pairs and do a bit of trend trading on those. All right. Well, before we go, let's take a look and see what I mean by that. Okay. So if we take a look over here at our hit target list, and we've got a lot of hit targets right here. All right. Look at all the euro crosses. All the euro crosses. Now, if you're not in on any of those euro crosses, now I believe I'm in on all of them, so that won't work for me. But if you're not in on any one of these, you can start doing some trend trading on this to make up and recover on your losses. The same on the pound. All right, the pound cross. If you're not in on any of the pound crosses that have hit targets this week, that's creating an opportunity for you to be able to do some swing trading on that. Okay, and this is probably what I'm going to do heading into the different weeks and that. When we get these type of setups where we got sideways movement maybe a hit target for that week, doesn't stop us from looking for more or looking for a trend-based opportunity. So let's take a look over here quickly. Let's take one currency pair that I may not be in. Let me see, a pound CAD. Am I in on pound CAD? No, I'm not. All right, I'm not in on the pound Canadian right here. All right, now with me not being on the pound Canadian, I can go ahead and take a look at the chart. Right, let's go to pound Canadian right here. First, go to the larger time frame. All right, so the pound Canadian looks like it's looking for a retracement back up north. It broke through the channel like here, and it's looking to retrace back up to the top. Now, there may be a little bit of consolidation right here, but let's go take a look over here on the low time frame. So this is the consolidation. Now, because we look at the larger time frame, and the larger time frame is saying to us that bulls are in control, right? At least in the short-term recovery, right? In the short-term retracement move, bulls are looking to take control of that move. So if I look at this right here, this is the consolidation I'm at here. So trade the consolidation at support here. Buy at support. Now, if the range is tight, like we have right here, then clearly even the 15-minute time frame seems a bit tight. But it's 400 pips. This is what's insane. It's 400 pips. So if I look at this right here and I said, hey, I'm in sideways consolidation, how do I take advantage of this 15-minute time frame? If I enter here in the 15-minute, my stop's going to be almost as wide as my profits. Not a good choice. But if I flip this down to from a 15 to a 5-minute time frame, you say, Big Dog, are you crazy? 5 minutes? Well, the thing here is, with a 400 pip range, you may want to get in on a lower time frame. Look at this. I can even go down to 1 minute. Look at this. Look at the 1 minute. The 1 minute is going to give me much better trending opportunities. Believe it or not. All right? The 1 minute is going to give me much better trending opportunities. Look at this. I mean, look at this. This is a trend. I mean, this is an opportunity right here. All right? It's called, by the way, traders, if you didn't know this, it's called a gear down trading approach. All right? This is called a gear down trading approach. All you're doing is you're just gearing it down. The opportunity is still there. Your stop losses will be probably about 40, 50 pips wide, maybe even more than that. It's insane. But take a look over here. If I had to go ahead and want to enter on this trade right here, once this blue line was across, it would enter me about there. Yep, about there. And my stop loss on the 1 minute time frame would probably be below here, which would probably put me a 60 pip stop loss. 60 pip stop loss, and price is already gone ahead and moved 70 odd pips back up north. Intraday trading, 1 minute time frame. Are you kidding me? All right. Now let's take a look over here. If you traded this downward trend right here and you got in after the fact, look at the re-entries on this. All right. 1 minute time frame. Let's wait until we get confirmation of blue channel below the red channel. Let's say we enter right about here. Yeah, we're selling. Now, every time the market goes above the blue channel and below again, we're going to sell again. Here's another sell right here, there. Here's another sell right here, there. Here's another sell right here, there. There. There's another sell right about there. Boom. There's another sell. That one, maybe not as much. And then price got down here. Now you're looking for a 1-to-3 risk-reward ratio, right? So if you look at a 1-to-3 risk-reward ratio, stop loss is all the way up here. And if I go ahead and measure this out, let's take a look here. I'm going to measure this out using this measuring tool right here. We had a stop loss, 89 pips plus 10. You're looking at a 100 pip stop. So you're looking for a 300 pip target to the downside, right? That was 280 right here. Let me see here. So you actually no, you're scalping. So 2 to 1 would be fine. You're 2 to 1. would be fine. Even a 1 to 1, 1 to 1.5 would be fine. But believe it or not, look at this. So you're looking at about 186 pip stop loss. That's a 1 to 1.8 risk-reward ratio. All right? Listen here. And as soon as price starts breaking back above the channel right here, you get the heck out of Dodge, you look for new opportunity. So don't be afraid when you look at these type of things, like the pound Canadian right here, it's actually offering a great opportunity for traders to go ahead and move down to, just like I said, a 1 minute time frame and do some intraday trading and scalp towards the top. So don't be afraid to go ahead and move down to a lower time frame. It certainly is something that the markets are making available right now. And again, go ahead and look at the environment first that you want to go ahead and trade. What I did is I went to the daily time frame. I noticed that the daily time frame was indicating that there's some bullish rally expected. Went down to the 1 hour time frame. We saw consolidation. Went to the 15-minute. Still consolidation. But of course, the market was, looked like the entry that we're into based on that strategy would be too late. So we went down to a lower time frame. Go down to a lower time frame. 5 minutes. Nope. Go down to a 1 minute. Perfect. Because what I was looking for, by the way, just so that you know, what I'm looking for is a gear down gear down trending approach. It may be referred to as scalping because you're trading such lower time frames. But what we're doing is we're really looking at the lower time frame to look for trend opportunities with inside consolidation. So the question here is, there was always that the question that is, does the market trend all year through? And the answer to that question is yes, it does. It does. All right? No, it doesn't. It does have consolidation. But the trick to the answer, the trick to the question is this. Even though we do have consolidation throughout the year, right? We have trends and then we have consolidation. Even though we have consolidation, you can still go ahead and do exactly what I did. Move it down to a 1 minute time frame. Now you've got a trend with inside that consolidation. So using a gear down trading approach allows you to be able to still trade trends or a trend trading strategy, but now it's going to be on a 1 minute time frame. Yep, 1 minute. I know it's ridiculous. It's crazy. All right, but it's happening. All right, traders, that's all for us this morning. Best of luck for you this week in trading. We'll keep an eye on the pairs that we're going to focus on. Let's see how the market pulls back this week. And by Friday, we're either in the money and recovered some, or we are still waiting for the next move. We'll take a look and see what happens on Friday. This is the FX Big Dog wishing you peace, joy, and successful trading. Until next time, happy trading.